every business, even if they're unknown and even if they only have a website, faces cyber exposure. So a lot of it's basically a misconception that cyber, there's nothing to get here from me, says a small business owner with 5 people that only has a computer or maybe a point of sale cashier system. But it's not true. It's going to hit you as well.
In today's conversation, we're going to be talking all about cyber insurance with Daniel Kasper, who specializes in the field of cyber risk and cyber insurance. While it's not a pure play in terms of computing technology, cyber insurance is almost something newer and no less technical, with important financial modeling and math considerations in addition to traditional cybersecurity. He got involved in cybersecurity working as an intern for KPMG Germany and has worked at a managing general agent, which is a type of wholesale insurance broker focused solely on cybersecurity. He has both a bachelor's and master's in economics and is currently pursuing a PhD in cyber risk quantification and its macroeconomic implications. He's the principal behind the website cybereconomics.com, which aims to bring some of the research and knowledge about quantitative cyber risk management out of academia and into the open. Without further ado, Daniel, welcome to the show.
Thank you for having me.
A lot of people have heard of health insurance, car insurance, and words like actuary, broker, agent. Just break it down. What goes on behind an insurance plan or a structure? Like, explain to me like I'm 5.
So usually the split you do in insurance is between life and health insurance on the one hand and property and casualty on the other hand. Now, there's certainly difference in modeling and requirements for capital, and cyber is a property and casualty insurance type. So within property and casualty, for example, your car insurance, there are also more or less standardized insurance types. Again, car or building insurance, you have like hundreds of years of loss histories. People are very good because they have such rich and structured data to be able to price and to come up with sensible coverage options for everybody. In the insurance business, you basically have primary insurers and reinsurers, and the primary insurer is basically the one you go to, so they're also working together with brokers. And depending if you're a private person or a small business, for example, you usually have one broker you go to, and they help you to cover your losses against unforeseen incidents. Cyber is now a new type of insurance, and it covers you against several elements, but mainly against malicious third parties.
So cyber insurance, you would say, is a form of property insurance then?
Yes, it's property insurance and also liability insurance.
What is cyber insurance not? So you talked about what it is, but maybe shed some light on some misconceptions of people might think of, what isn't cyber insurance?
Mm-hmm. So the term cyber in the insurance context, it usually refers to a man-made risk. Now, this is the big distinction that a lot of laymen don't make. They think it's a matrix type of thing where you have some hackers or mistakes and errors at the root of cyber insurance. And sometimes errors and omissions, for example, are included in a cyber policy. Usually this is a different insurance type. But cyber usually refers to hackers and ransomware. Now, it's a small level. For example, take a retail store or something that's not usually thought of as a tech-affine business. So, your mom and pop store down the road, 10 employees, they're selling maybe groceries or like antiques or something like that. Now, you wouldn't think that these kind of businesses actually need a cyber insurance and that they don't have this exposure towards cyber. But this is, already a misconception. And if not now, it will become in the next years.
What are the main selling points or value propositions for having cyber insurance? Because on the first thought, people might say, oh, well, obviously I want to be insured against hackers and ransomware. But then they might think, I don't have that much money for my business, or why would a larger company want something like that?
Starting with data privacy laws, everybody is exposed to cyber liability to some extent. So if this antique shop, for example, because it gets hacked or maybe also of an error or something like that, leaks its customer database or other personal sensitive information, then they are looking at fines. On the other hand, we have a ransomware wave, which especially now during COVID-19 accelerated incredibly. So we're looking at 300 or 400% more attacks with ransomware in the last 8 months. And basically even these small, not tech businesses also have exposure towards cyber. And they can get coverage to what's usually covered under cyber insurance. So if this applies to mom and pop stores and non-tech businesses, then of course it also applies to medium-sized companies. And then it also basically goes to large companies who, at the very least, when they come to be indexed on a stock exchange, start to face harsh regulatory requirements as well as punishment as they are not fulfilled. So the main proposition is for a small store, look, guys, you don't even have a dedicated IT department. You don't even know how to handle your own IT in many cases. Are you really aware and know what's going to happen when a breach or something like a hack attacks you? And the more you go from medium to large, it is, okay, guys, everything you have is sensitive. If one of these databases is set up wrongly or you get hacked or maybe there's some very sophisticated stuff, by the way, I should mention it's not just only external parties, but also internal parties. Disgruntled ex-employees, for example, that are the perpetrators in cybercrime. And if you don't have that, then cyber insurance is a very elegant way to not only cover yourself against the financial hardships that might face you, but also to get competent people that basically do nothing else via the insurance company that helps you in an incident case.
That's really interesting where you said kind of everybody is going to start to need cyber insurance, because you look at businesses. If you're in a brick and mortar store, you have real estate property, you're going to have some kind of fire insurance, flood insurance, something to insure against natural disasters. And when you look at the occurrences of natural disasters, they're actually much fewer than something like getting hacked or these man-made cyber occurrences. And especially even if you don't get hacked, what if your shop is used as a launch point to pivot as a proxy to attack another company? And now you might be on the hook because you didn't secure your own systems and you were involved in that.
Exactly. This is the primary split that you also do in cyber insurance coverage. You do it on first-party damages, so basically the damages you suffer as the insured party, and liability and third-party claims. This is basically when your systems get used to attack somebody else, or a worm or a virus gets spread through your email list to your customers or employees or whatsoever.
What do you think is hindering the more mainstream adoption of cyber insurance? Because people kind of are talking about it, but you don't see it as standardized as other forms.
On the demand side, so basically the risk owners, the businesses themselves, they're looking at cyber, yes, this could happen to me, but they usually don't believe it until it has happened to them or somebody in their immediate circle. There's this meme of SpongeBob, for example, where they go, this is the cybersecurity budget before something happens, and this is the one where after it happens, and then it's like a wallet full of money getting opened, yeah, let's spend everything. So this sadly is exactly how it is currently. So the lack of awareness and the lack of the abundance of invincibility, thinking this can't happen to me, nothing can happen to us, and especially a misconception of what a hacker wants. So you always have this, kind of hoodie guy, the stereotypical Mr. Robot or somebody plugged in the Matrix. Most cybercrime doesn't happen as targeted actions. Now, these are things that are usually, those advanced persistent threats are reserved for high-value targets or, special kind of thing. But every business, even if they're unknown and even if they only have a website, faces cyber exposure, be it through ransomware, which in most cases, or, almost exclusively spreads untargeted, but also being it by misconfigurations of your website and stuff like this. So a lot of it's basically a misconception that cyber, there's nothing to get here from me, says a small business owner with 5 people that only has a computer or maybe a point of sale cashier system. But it's not true. It's going to hit you as well. It has slowly and gradually changed in the last 3 years. And now in the COVID year 2020, we see a huge spike, not only in ransomware attacks, which by some estimates increased by 400 to 500% now, but also in the awareness that's basically associated with these ever-increasing hacks. And also the frequency that you see in the media that are covering those high-profile cases where the whole company doesn't work anymore for months sometimes because the ransomware has locked their computers.
That's a great point you make with the hacking risk and the cyber risk. It's not like these hit teams of specialized ninjas that are come and steal things or do things. It's more like cat burglary, just vandalism and pickpockets and just happening generically. They're very opportunistic.
And automatic. Like an automatic opportunism basically through most systems.
Okay, so what are some of the factors that go into a cyber insurance plan?
On the one hand, you have the coverage elements. So basically what you want to cover under it or what you don't cover under it. Again, you split it up between first-party and third-party coverage. Now, for first-party coverage, the usually elements are the costs for forensic and cybersecurity services. You have legal firms that are often involved when you have a data breach. Sometimes they come in for the client to basically act as a fiduciary, also against the insurance company. You have business interruption, which is one of the most treacherous of all the cyber risk. This is basically through a cyber attack, I'm not able to run my business because my IT is down, or maybe even the feds come in and shut down the whole operation because, I don't know, everything was leaked. On the third-party side, you usually have defense costs against not justified claims from a third party. So when somebody sues you and they say, okay, we got our personal information hacked here through your system or through your mistake. You have media liability, which often is also included, which basically means somebody hacks your Twitter account or, as in your case, your YouTube account. These reputational damages are usually also included in the first-party coverage for the insured party themselves. And the other big part in the third-party liability coverage are fines. Now, the US has a long history of quite strong regulations concerning data privacy. For example, you have the HIPAA that concerns health-related data. So if somebody like a hospital, for example, leaks data, then there's a huge fine usually associated with that. And on the side of normal consumers, you have, for example, in 2003 already, there was a Data Privacy Act in California. So if through a hack you have costs that arise from such an incident, then these are usually also covered in the third-party coverage of a cyber insurance policy. Then it comes down to the hard financials. The one hand is the coverage, so basically how much is the given policy payout as a maximum. Then you have the deductible, which is the amount of money that you have to pay for any given damage before the insurance policy starts paying out. And then usually you have associated with all of these sublimits. So for example, media liability might be 1 million, the whole policy might be 10 million, and the costs that are covered for cyber forensics, for example, might be 5 million. So these are basically the main factors on a cyber insurance policy.
That's interesting because it looks like the structure behind a cyber insurance policy isn't very much different than something like health or car. It's kind of inherited those qualities, such as if you're driving a car and you wreck your car, those first-party damage claims, you might be covered like the repair costs at the auto store. So now the people servicing you or the lawyers involved or the doctor and medical professionals involved will get paid out, or you get covered because the insurance company is paying the service providers. And now if you wreck somebody else's car or injure someone, I don't know, a politician or someone who's well known, and you're drunk driving, there would be liability, media, reputational stuff there. So we talked about kind of the pricing structure where you pay your premiums to the insurer and for a payout in case you get hacked. And there's a deductible that you have to co-pay into before you get your payout. So how much does a coverage or a plan actually cost? Like for maybe a small, medium, large, 100, 1,000, 10,000 employee type of firm?
Usually employees is one of important factor in pricing, but the most determining one is the coverage limit. So if you're looking for 1 million in coverage, if you have 100, 1,000 or 10,000 employees, might be a difference of, let's say, 20%. So 10,000 employee firm pays 20% more than what a 100 employee firm pays. But if you increase the coverage from 1 million to 2 million, for example, then the price might double or go by 50%. So rather than looking at employees, it makes more sense to look at coverage, to give you a broad sense of what it costs. And for a coverage of 1 million and let's say a deductible of 50,000, they're probably looking at annual premiums of about $1,000 to $1,500. And if they want to increase that again, then 2 million, for example, in coverage, then they might be looking at 2,000 to 2,500. The important metric here is basically the relationship between coverage and the price. And again, this is way more sensitive towards an increase in coverage than in employee size. Now, for large firms, and this is a factor for all firms, basically which industry you're in. Now, Hyper, for example, for hospitals, there you're looking at way higher premiums usually than in a brick and mortar store. So for hyper, for example, if you have a 10 million coverage with a deductible of maybe 500,000, you're looking at annual premiums of maybe $250,000. Again, depending on several factors as well. But so this is basically what you're paying. A small business pays like 0.1, 0.2, maybe 0.5% of the coverage sum it wants in cyber insurance. And something like a hospital that's looking for a larger coverage, like 10 million, is paying 2.5% of that as annual premiums.
How do you quantify cyber risk in financial and economic terms? Such as getting hit by ransomware or getting hacked. For a coffee shop, it's very different than maybe for a hospital.
The first thing you mentioned is also very fitting already, and this is the split between economic damages and insurable losses from that. There are some types of losses basically associated with every cyber incident, which are not coverable or not covered, at least currently, by cyber insurance policies. So you have the split between what's insurable and what is the total damages. And then the split between a coffee shop again as a maybe brick and mortar kind of business versus something like a hospital, which has a lot of private data and again, for example, covered under the Healthcare Data Privacy Act, under HIPAA, for example, where you face definitely harsher penalties than the coffee shop. You have to say that the modeling between cyber or for cyber damage is still very nascent. So while insurers have taken on a tremendous amount of risk already in the billions of dollars in premiums written and in a bad year, so usually express that in the actuarial sciences as a 1 out of 100 event. So in 1 out of 100 cases, what's the loss that we're facing, for example, in 2021, given my cyber portfolio of whatever, 100 million in premiums? We're looking at like 50 billion or something. So the whole cyber insurance industry could be looking at 50 billions of damages next year if it's a 1 out of 100. The question really is, okay, how do we model this? And let's say straightforward approach is like looking, okay, what are the cyber damages, cyber incidents of the past? What of that can we attribute in terms of damages? So can we quantify what was lost? And then also in the next step, what of that would have been insured or would have been insurable? Now this fails to some extent. There are definitely data sets out there and there are vendors that offer data sets for that. And this is basically the baseline that we had in the market for maybe 5 years now. One of the key characteristics of cyber is that the threat landscape is ever evolving. So even if we had the perfect estimation for 2019, for example, for any given company, a whole industry sector, or like the whole world, we not have like the same predictive value as for car insurance, where if not autonomous driving comes into play, we basically can look at 50 years of loss history. And we also know that the 51st year would have very similar losses to the period before that. So these are basically the challenges. And there's certainly somewhere it's very similar actually to pandemics. When it comes to ransomware attack, it has more characteristics to a pandemic than, for example, to car accidents, because the spread and also the recovers and so on is more similar to how COVID, for example, spreads than how a car accident spreads. We try to model cyber as every other line of insurance. This is not as potent here because of factors that I mentioned. And this is basically ongoing research, which is of great interest for academics as well as to the industry sector. And this basically includes the primary insurers, the reinsurers, capital market, everybody who is a stakeholder into this, including, for example, cybersecurity firms who come in to remedy the claims. Everybody is looking at how to model these damages, and even more importantly, how to model the correlation between damages.
So just to recap, let's bring it back to cars. You have 50 years, maybe even 80 years worth of history of car accidents and the amount of damages that each of those have incurred, everything from the little dings or fender benders to like total chaotic multi-chain highway disasters. You have a amplitude in terms of the price differences and the cost for insurance. We could call that 1 sigma or 2 sigma events in terms of the standard deviation. And, we know that in the entire existence of the car industry, there's only been maybe 3 sigmas or 4 sigmas in terms of damage. Kind of like if you go to a hiking park next to a river, they mark the water elevations throughout history. And so you have your 10-year flood, 50-year flood, 100-year flood. And because we don't have very much history in terms of cyber and the data, you could have a 12 sigma event Maybe that's WannaCry that just completely destroys your entire model, and now your insurers are out of money because they didn't account for that.
Not only out of money, they're basically broke in some like very bad scenarios. And the requirements for insurance companies basically don't allow you to take on that much risk when there's so much uncertainty involved there. The point you made about the floodings and the peaks of the floodings is a very famous problem in actuarial sciences. Let's say we have 10 years of loss data, or in this case, flooding data. How can we predict a 100-year event, basically? How can we get from a sample of 10 years to what's the worst case out of 100 years, basically having to take into account 90 years for which we don't have data? And yeah, this is basically the problem that we have right now.
So what are some broad categories of cyber risks out there? Maybe ones that are actually insurable and ones that are not.
One of the vectors that is insurable and probably most dangerous in 2020 is ransomware. And for ransomware, what is covered is not only the cleaning of the systems, so basically getting rid of the ransomware and unlocking the systems, but also possible payment of ransomware, usually via Bitcoin or another cryptocurrency, and even the negotiation process, which, as we have seen, is, to be honest, quite ridiculous sometimes, where basically the insured party or the insurer or the third party that's tasked with doing the negotiations is basically like in a chat interface. They're like wiggling for thousands of dollars or something. The hackers say, okay, we need 30K or something to unlock your systems. And then they go, like, yeah, look, we can only do for 10. And then they go like, okay, do 25 and so on. So it's like a silent auction sometimes going on. And all these threats are usually covered, and all these costs that are incurred by that are covered by a cyber insurance policy. When I say usual, that means like 95% plus of policies. But again, in 2020, this is the most dangerous vector, also the reason why to get cyber insurance in the first place. Besides ransomware, on the first-party side, we also have the costs that are associated when a hack occurs. So looking basically for the leak that was possible, an unpatched server or something like this, maybe a Citrix client that wasn't properly configured, then basically the reinstatement of systems back to whatever the normal level is. And usually also a small forensic analysis to see if this was the only leak. So to make sure, okay, we have patched it and nobody can enter. And then what might not be as obvious is the massive legal costs that are usually associated with cyber risk on first-party side as well as on third-party side. You can see, for example, if you have stakeholders, so if it's a stock-listed exchange, exchange-listed company that you're looking at, of course, they have to do a lot of compliance in the aftermath of a cyber attack to not only inform their stakeholders and shareholders, but also to make sure that it's properly fixed, unless you want to face huge liability from shareholders going forward. And on third-party side, again, liability, so every lawsuit basically that's involved, and also the media liability when you're basically damaging the reputation of somebody else through a hack. And on the stuff that's not insurable, and here we should say what's not usually insurable. So there's some policies where you can buy it as an endorsement, basically. So you pay a little bit more and then you get these inclusions. On the exclusion side, things that are not covered under cyber, a war exclusion in many cyber policies. So this came in at NotPetya, because the official line now of the United States and the United Kingdom that it was Russian hackers that were responsible. And NotPetya was mainly used on Ukraine servers. So the theory is that Russia used it against Ukraine to weaken their cybersecurity and whole economy. And as it was like a warlike kind of weapon, these are usually stuff that's not covered under affirmative cyber insurance policies. And this, by the way, is a point of ongoing litigation. There's a very famous case in the cyber insurance law sector between Mondelez, they are the producers of Oreo and Toblerone, huge multinational company. And they're suing their insurer Zurich to the tones of 100 million in a policy that's, in Mondelez's eyes, should have been triggered by NotPetya. And Zurich claims this warlike exclusion, basically saying, no, we're not going to pay because this was like a warlike attack, and therefore we will not pay out these 100 million. Besides these exclusions itself, usually what's also not covered, but is usually available in other lines of insurance, is intellectual property. So it's very hard, to quantify how a loss of intellectual property directly hits you. But again, in other standalone insurance types, this is then insurable. But your out-of-the-box cyber insurance.
So essentially, in a cyber insurance plan, there's certain factors already built into the model. And things that you can't include or account for, such as getting a bomb dropped on your car by a foreign actor, that is not insurable. And something like the intellectual property, all of the losses would have incurred, or all of the money that you would have made if you didn't lose your IP, there's no real way to determine that. So that's also not insurable as well. So it's kind of these trickle on knock-on effects.
By the way, you find this ripple effects, this inter-dependencies everywhere in the cyber value chain, be it in coverage, be it in potential losses, be it in actual losses, be it in correlation between damages, be it on the modeling side, be it how the insurance sector between primary and reinsurer is set up. So dependencies are basically everywhere when it comes to cyber and really looking at the risk.
So let's say I'm McDonald's, right? I'm some big multinational company, and I want me some cyber insurance. Walk me through the process of what I need to do.
So as McDonald's, you're a huge player. You have a huge exposure to cyber, and you will likely not get as much coverage as you want. From current numbers, basically the biggest cyber insurance coverages that are out there are between $1 billion and $2 billion. Now, at these sums, again, where you have these huge exposures, these huge companies, you're not going to your local agent or broker. These are usually specialty insurance products. And the biggest marketplace for that is Lloyd's in London, which has about 10% of, I think, the global insurance premiums overall, and is especially focused on these risks that are not insurable anywhere else, be it because it's hard to price. For example, like the voice of a singer or the legs of a football player, which, by the way, all happened in London. Or be it because the coverage amount is not large enough so that a normal insurance company would be comfortable taking it on. So McDonald's probably directly or indirectly goes to Lloyd's and says, okay, we have such and such exposure to cyber and we want to buy $1 billion in coverage. Then you go through all the coverage elements that you want to have covered. Now, in the case of McDonald's, you have a lot of employees on your payroll. Also, I would imagine a high turnover. So you're very liable against third-party losses there. And data privacy is most likely the most important risk that you want to have covered. At Lloyd's, you have the so-called syndicates, which are like more or less small insurance companies, but they're usually all sitting in the Lloyd's building in London. So probably what's going to happen there is that you have like 10 syndicates, and they're going to slice it up. And they go like, okay, I take 5% of this, and syndicate B is taking 10% of this, and syndicate C is taking 20% of this. And again, this will be not a straightforward process, so it's not as easy as getting car insurance, as this, besides the audit, you have a lot of negotiations as well, not only in the price you pay, the premiums, but also in what is covered and what is not covered. See, I would imagine within like 2 to 3 months for McDonald's.
Okay, so let's scale it down just a little bit. What if it's just some local, very local credit union or some very tiny boutique bank with maybe under 100 million in assets, maybe under 100 employees?
It gets a lot easier and more straightforward at this point. So as a small retail, for example, or a bank, the two possible channels is either through your broker or agent that you have all your other insurance policies. This usually then is a so-called add-on policy or an endorsement of cyber. Now this basically is in your fire insurance, they ask you, okay, now this new fire insurance type that you made, it doesn't include cyber. Do you want to include cyber? And then you can book it on top of your fire insurance, of your property insurance, of every other insurance type, basically. So this is basically having this as an add-on. And the easiest way to do this is go to your broker or whoever is your channel to get all your other insurance products. Now, the other way, which is also very similar actually, is to go into the internet. This would be more like direct insurance sales. And then you contact directly through a website or like a phone number, one of the carriers. They usually give you more likely a standalone cyber policy. There it is then, okay, we have here the cyber standalone insurance for you, which covers, for example, the mentioned first-party losses like breaches and ransomware and so on.
So broad brushstrokes, what are the number of players, brokers, customers, dollars? How do you kind of measure the overall scale of the cyber insurance market? What does that look like?
So there's some regulatory filings that have to be made in the US, for example. And as the US is probably somewhere between 60 and 80% of the overall cyber insurance market in the world. Now, the best estimate that is currently out, they peg the whole cyber insurance market worldwide at $5 to $6 billion. And the growth rate in the last years was about 30% annually. And other important metrics are, of course, the number of carriers that offer cyber insurance, which currently is about, in the US, 160 providers, as far as I know. And the other important metric is how the cyber insurance market is performing. So the general property and casualty market, so all your car insurance, building insurance, your home insurance, everything like this. If you take together all the premiums that the insurance sector is taking in, and you basically look at it against all the claims that are made, basically everything that's paid out, the whole P&C industry makes about 1 to 2%, call it net margin. So in 100 billion that the insurance sector in the P&C niche takes in, they're making about 1 to 2 billion in profit. Now the whole P&C market has about, I think, 3 trillion in outstanding premiums currently, 2019. For cyber, in the US market, in the last 3 years, the margin was more like 20%. So in the last 5 years, and again, the market is growing by 30%. So in 2020, the market, it's like compounded interest, right? So the market in 2020, if it grows by 30% every time, was, I think, like 6 times bigger than it was 5 years ago. And in all those years, on average, the cyber insurance carriers, the insurance sector, made 20%, roughly speaking, as a net margin on every dollar that's taken in premium. So a cyber insurance market has made 10 times as much in profit on the same number of premiums taken in as the whole P&C industry. And this is a very surprising fact, because we know that the underlying risk of cyber is ever increasing. Now, this will be very interesting to see, because through COVID, basically, the risk itself, most insurance policies, they are like 80 or 90% of insurance policies are entered in at the 1st of January. So on 1st of January 2021, we will see how the market reacts. But we already know from basically industry sources and what the big insurers are putting out there that the damages, of course, have increased. As I said, the ransomware claims have increased by 500 or 600%. And therefore also the price and also the willingness to provide capacity by reinsurers is decreasing in terms of capacity, and the price is increasing. So we are also in a very interesting phase right now, and in the next few months we will see how exactly COVID also impacted cyber in quantitative terms. Qualitatively, we already know it has been a huge hit, and the cyber damages are increasing.
Wow, that is fascinating. So as a recap, the traditional insurance industries, non-cyber insurance, are making almost 10 to 20 times less in profit than cyber insurance, even though the cyber insurance, you would expect them to be riskier and newer and have to pay out more payouts than the traditional ones. And 30% year over annually means it doubles every little over 2 years. So, 2 years from now, you would see a $5 billion market become over maybe a $10 billion market, which is quite large. So what are some of the biggest players in the cyber insurance field that actually offer coverage and plans? Like who are the big name marquee guys, and maybe versus some of the smaller players that will provide it?
Looking at the market, the US market is by far the largest one, probably accounting for 60 to 70% of global premiums, maybe even a little bit more than that. And there are now about 160 US carriers who are offering cyber insurance. And this has tremendously risen in the last years. So basically, every medium to major insurance company in the US will likely have a cyber insurance policy. Now, the actually 5 biggest players, and we know that because the National Association of Insurance Commissioners, I think it's called, they let every insurance company that's licensed in the US file out a so-called cyber supplement, where they really have to give concrete numbers to how much their portfolio is, how much policies they have in force, and so on. Currently, biggest insurer for cyber after portfolio size is Chubb, then followed by AXA US, AIG, Beasley, and Travelers Insurance.
So you mentioned the audit for the large players. Would the smaller players going through the add-on or endorsement have to go through audit and negotiation as well of their own like computer systems and their processes?
It depends on the size and also on factors like the loss history. So if you're like a business that has been hacked like 2 years ago, then this will likely trigger an audit if you're not super small. So if you're not making like less than 100K in turnover a year, usually the loss history itself will trigger an audit. But this barrier is very flexible basically for non-affected businesses so far. So in Germany, it again depends on industry, so which industry the business is in, also on some other factors. The bank with 100 million in turnover, for example, they would likely face an audit. And if they slim down to like, I don't know, 30 to 40 million, you probably don't have an audit. But again, this is very jurisdiction and country dependent. So McDonald's would have like more or less standardized audit after ISO 27001, for example. So, in terms of effort, it would be like a 30-person day, for example, that are required for this audit. If it's like a smaller company, again, maybe on the fringe of this barrier to get an audit or not, it might be like a 1 or 2 day job where you have remotely people looking in there. Please show us your policies. Please show us your backup management. Some of them are also self-assessments and self-questionnaires. For very small companies without audit, basically everything is a self-assessment because you have to check the 10 security boxes, for example. And it's a very fluid, basically, process. And some of them are like mini audits, basically, just for cyber insurance. Some of them are more standardized audits. Pen testing usually is not part of it, at least if it's not a huge company like McDonald's. And the business continuity plan, for example, at some size, so if you have like 50 million turnover in the financial field, that's like 200 employees, I would imagine, then you also would have an audit going for if you have a business continuity or IT system services continuity plan in place. So these would be part of an audit, but pen testing and all this technical stuff, and the gist of it is, yes, it's still more primitive and non-technical than a cyber security professional would think currently. But as mentioned, the market is hardening, security standards are going up, and the price as well is going up. So this is likely not to continue in the next 2 to 3 years.
So let's say I get hacked and now I need to file a claim. What's the process for doing that once I already do have cyber insurance?
Most carriers offer a 24/7 hotline, depending on which jurisdiction you're in. So in Germany, there's some players basically that offer you to do the claims management themselves. So you call them and then they contact you, see, okay, what's the problem? And then they either have in-house teams to do the ramification, or they get third-party vendors and service providers to help with you, and they do like the management and so on. Now, the US way, for compliance reasons, seems to be that the US insured party usually contacts from a list of suppliers and vendors and basically does the contact and so on their own. So in this case, you basically have this list. When you start your cyber insurance policy, there you have all the players, KPMG, for example, or more technical, smaller boutique kind of cybersecurity firms, and you contact them yourself. And they go like, hey guys, I'm insured with, for example, Chubb, the biggest insurer currently, and I need to have somebody look at this. I'm pretty sure we have a ransomware case here. And then basically the supplier contacts you or sends maybe the bill to you, maybe to the insurance company, and then the claim gets paid this way.
So do your actuaries who have their math models and actually go in and determine the level of risk, to provide you insurance, how specialized in cyber expertise do they actually need? Or are they working maybe in tandem with a customer's own in-house IT and security staff?
You're seeing now cyber teams that are consisting of cyber actuaries. So these are basically people who only do modeling of cyber. They definitely have a lot of cyber expertise. I have 6 people. Some of them are cyber risk engineers, cyber risk professionals, and some of them are more or less traditional actuaries that also might be modeling other than cyber damages. And you mentioned the IT personnel of the affected party. These are usually not involved in the modeling, but maybe in the underwriting process. So the underwriter who makes the decision, do we insure company A or do we not insure it? And if so, to which conditions? And so the actuary usually doesn't have the direct link to a customer's IT personnel. And on the other hand, of course, you try to gain from the claims and like a second-hand kind of information through that. But it's not like they're usually in contact between each other. But your own cyber risk engineers, and especially on the claims side within the company, they are definitely in talks. And generally speaking, cyber is like a very collaborative topic. And it's a little bit like mixed martial arts, for example. It's the way I think about it. So in the 1990s, for example, when the mixed martial arts was born, and quickly it was clear that jiu-jitsu and like wrestling and going for the jugular, like the weak points of the human body, is better than boxing and taekwondo and so on. Then it was like the pure mixed martial arts in the beginning, but then it converged. So then it wasn't like the judo fighter versus karate, jiu-jitsu against wrestling. Then it became just mixed martial arts. And this is basically the process that I'm seeing right now, where we have really dedicated cyber professionals. Most of them have like industry experience in other insurance types and cybersecurity lines. But I'm pretty sure we will come quickly to a point where people might, right after university, for example, start to only do cyber risk modeling, cyber risk engineering, really looking at this thing as a whole.
So do you ever see cyber insurance becoming available for maybe individuals? Because a lot of times people themselves are subject to maybe ransomware or getting phished.
Yes, there's already some personal cyber products out in the market. This market is definitely way smaller than the corporate cyber insurance market. And the similarities between personal cyber insurance in terms of what they cover to corporate cyber insurance are there's not that stark of a difference between them. So, for example, reputational harm, of course, makes for private persons, natural persons, as much sense as for a corporation. The same goes for data recovery, for example. If my MacBook, which maybe I'm a student, right? I saved a lot of money to have a MacBook. If that gets bricked or is unusable, of course, I want to have this insured as well if it's like the result of a ransomware attack or a breach or something like this. And then liability, maybe, of course, you can still be held liable in cyber terms. Again, your Twitter account is perjuring maybe your current firm you're working for, and then you lose your job, for example, as a result of a cyber attack or something like this. So the coverage is very similar to corporate coverage. The market is definitely there, as you mentioned. Tech non-affine people also have the same or almost the same exposure as more tech-related people. And the market for personal cyber insurance is certainly behind the corporate one, but it's likely to also pick up steam, maybe in tandem with the corporate sector in the next years.
So you're an economist, or in German, they call it a Wirtschaftswissenschaftler. What got you into cybersecurity in the first place?
So as you mentioned, I have a bachelor's and master's degree in economics. During my master's, I was basically a working student for a small consultancy. Now, they were focused more on small businesses, more on business administration. And I wanted to definitely do something with computers. And a school friend of mine, he was a very good friend of a manager at KPMG in my local town of Cologne. And basically, I mentioned that to him. We set up the interview, that went well. And I basically became an intern and then a working student for the cybersecurity service of KPMG here in Cologne, Germany.
What was your experience like working at KPMG, doing cyber risk consulting?
It was amazing, certainly. The intern and the working students here, it lasted like 1.5 years. During the internship, which was full-time, I was on a project for a big financial corporation here in Germany. The cool thing about that was it was a huge project with, I think, like 18 distinctive working streams. And I was working in the business continuity working team of that. And business continuity management basically looks at recovery plans, what happens in a disaster case when your IT falls out or other perils impact your business. And the insights I gained there were very valuable.
So your latest project is a website called cybereconomics.com. So can people find you there, right? And maybe tell us a little bit about that project you're working on.
When this interview goes live, cybereconomics.com will be up and running. If you're interested in some of the topics that we discussed today, starting from what is cyber insurance, to the academic research into cyber insurance, and especially how the current hurdles that we can work together as academia and the industry to work on this kind of thing, then cybereconomics.com is certainly the right place for you. And we have a lot of resources. So we first and foremost see ourselves as a top-level summary for all topics cyber-related. So, example, we touched on so many topics today, like what is in a cyber insurance policy, how does the market look like, what are common exclusions, how is silent cyber affecting the market, and so on. So there are so many topics today that actually could be their own video. And cybereconomics.com, if you're interested in that, regardless of your background, is the first place to give you a broad overview and also all the information and keep you up to date with developments in the cyber market, and also basically make sure that you're at the pulse of the whole development. There are so many stakeholders basically in this whole thing. It's so complicated. So many questions are still unanswered, and so many are actually unasked, that we really need a way to get every interested party or people who might get interested in them together. And this is basically what cybereconomics.com strives to be. And I hope that in the future that we can also do further videos on the topics that I cover at cybereconomics.com. So guys, if you want to see that, don't forget to like and subscribe, as is usually on YouTube. And yeah, so thank you very much, Ricky, for having me today. It was a really pleasure.
Yeah, so I'd love to do something, talk about cyber risk more. I certainly learned a lot, talking with you, and hope to see you soon.
Thanks, Ricky. Have a good day.